Hello everyone, welcome to a Wall Street from Main Street podcast. My name is Don Durrett, and today's special guest is a returning guest, is Don Durrett. He is an author and analyst for the gold and silver market, but he also covers other topics as well. Don, thank you for joining us.
Thanks for having me on, Mo.
Well, I want to start off this podcast by talking about the gold and silver market in general and do a 2014 review since we only have a few weeks left of 2014. Get your thoughts on what happened in the gold and silver market in this year. Now, this year, unfortunately, was another bad year for gold and silver, depending how you want to look at it, but it's also provide opportunities for investors as well, which is low prices. Now, a couple months ago, gold and silver took a new low for the year, and we saw silver go below $16, and we also saw gold hovering around 1100 and silver going below $16, which caught a lot of people by surprise. So let's talk about that and get your thoughts on why that happened.
Well, it's hard to say exactly why it's happened, but 2014 was basically a bit of a bloodbath for people that were invested in miners. Stocks just continued to go down and down and down. They haven't stopped. I mean, we're bouncing on the bottom right now. There's a lot of different reasons for it. A lot of people think it's just manipulation, that people are just controlling the price of gold. And if you look at demand, it doesn't seem to correlate. The demand has been in India and China has been very strong for gold and silver, for the physical gold. If you look at how much silver is being purchased, for instance, through the mint, the U.S. Mint, it's been basically an all-time high. So the physical there's been a lot of demand there, but the miners have been beat up. You said that the prices, we just went down to 1130 in gold, and now we bounced off a little bit, but 1196 it closed today. And silver was down to a little. It actually went under 15. I had a 1504 for it, but it actually did trade under 15 this year, and now it's up to 1588. But pretty much bouncing on the bottom.
Yeah, so the physical demand for gold and silver from the west, but more in the east, continued to climb higher and higher. I mean, if you look at the gold and silver mint, a lot of them have a monthly record in the amount of silver eagles and gold coin that they sold. I know in October, November, we saw all-time high in demand for the gold mint and silver mint, but yet the price does not seem to reflect that. And I think eventually, perhaps in 2015, we'll see a reflection in the price going up, because it can't stay this low forever. And also, if you factor in the supply side, a lot of miners cannot make money at today's prices.
You're absolutely right, Mo. The miners cannot, especially the silver miners. They can't make money at $16 silver. Very few of them can. So they're all burning through cash right now, trying to keep their head above water. Same with a lot of the gold miners, a lot of the producers. For example, Argonaut Gold is, their stock has come down from $10 down to almost $1. And they're a strong company, but yet their all-in costs are about $1,300, and they're just a little bit below current gold prices, and investors have just beat them up. And that's been the tune for most of the miners. If they're not making a profit, or if they don't have a good balance sheet, they've been beaten up and beaten up hard. And everybody has this fear that silver prices are going to stay low, gold prices are going to stay low, and the miners are all going to go bankrupt, and nobody wants to buy shares. And I understand that when the company's not making money, I can understand the reason to sell. But the other side of the coin, if you look at, we wanted to talk about this, if you look at the economy itself is very weak, in my opinion. And the stock market went up 400 points today, and it's a complete illusion. If you look at exactly what's going on, we've been in this 6-year so-called recovery, but at the same time, it's very difficult to find work. For instance, I work in computers as well. It's one of my main things in the IT world. the IT world right now, if you lose your job, to replace it is very difficult, even with my experience. If I lost my job today, I would have a hard time. Well, actually, I'm in a good situation. I actually have some connections. I could probably find something. But the average person, if they lost their job today, it would be really hard to replace. That's not a strong economy. It's an economy that's getting weaker. The middle class is getting squeezed hard. They're not growing. Income growth. If we look at income growth over the last 5-6 years, it's been very stagnant. It hasn't been growing. And so if we don't have income growth, how is this economy going to take off? So if you correlate that to an investor, as a gold stock mining investor, the leverage in these mining stocks is unbelievable. Because if you look at the risk reward, is gold going to stay down? Is it really going to stay down at $1,200? And how long is it going to stay down? Some people say it's going to go to $1,000. I don't think so. It could go to possibly $1,100 on this cycle, on this particular cycle. But looking at 2015, and I want to talk about 7-year cycles, if you look at 2001, 2008, 2015, and if we look at some of these issues going on around the world right now, for instance, if you look at Russia, what's happening in Russia, you look at what's happening in Japan, these are very serious issues. You look at what happened in the Middle East.
And I agree with you. And I've done my research on the gold and silver mining stocks, and I believe there's only a handful of companies right now that can make money with the prices today. All the other ones are going to have to shut their, or they did shut their mines for care and maintenance, or they're going to go bankrupt. Now, I want to ask you, because you do a lot of research on the gold and silver mining companies, why is it that some companies are able to keep their cash costs low, all-in cash costs low, while others can't, and it's completely out of control, and they go bankrupt?
Well, there's a lot of issues, and you're right. I analyze all of the miners. I have 530 stocks in my database, and I analyze them all. So I know all of the companies that trade in North America. And a lot of it has to do with grade, and it has to do with where you're mining and how you're mining, if it's a surface mine or if it's an underground mine, what your cost structure work out. And then a big factor comes into play is going to be some of your offsets. For instance, if you're mining silver and you have significant offsets in zinc and lead and in copper, that can lower your cost. So you can, if you don't have those offsets, then it's really difficult to have a low cost. So your grade comes into play as well. So there's a lot of factors that come into play that will allow people to have, cash cost. For instance, if you're a gold miner, you have cash cost significantly under $1,000. Say down under 600 is very rare, because these companies don't have the high grade, or they don't have the offsets, and so they can't make a profit at $1,200 gold. Although some of the the majors, the big companies, they tend to they get rid of in the last couple of years they've gotten rid of their high cost mines, so they've lowered their break-even point. So most of your majors are probably going to be able to make a profit. For instance, this year I did get a check for dividends from a mutual fund for the majors. So the majors are making money right now. But a lot of the mid-tier companies and some of your smaller companies, they are having a lot of trouble, especially in the silver. And that's made people run from the miners and sell them off. For instance, it's unbelievable how cheap these stocks have become. In my last newsletter, I had 55 stocks with quality projects that I projected as potential 20-plus baggers at higher gold and silver prices. But are those 50 stocks? These are all strong companies. You can throw darts at them and make, because the leverage is unbelievable for the stocks that survive. The stocks that survive, you're going to see many, what I call home runs, which is a 1,000% return. You're going to see a lot of those. And we're going to see quite a few 25 baggers and 50 baggers. The leverage is unbelievable right now, because these stocks have been beaten up. For instance, today there was announced that Coeur Mining bought out Paramount Gold and Silver. And they only paid, Paramount Gold and Silver has approximately 9 million ounces of gold equivalent, including silver. and they only paid $145 million. So that's basically $16 an ounce for two advanced projects that are really close to feasibility study. So these are advanced projects, and they only paid $16 an ounce, and that's what they're going for right now. So these companies that don't even have advanced projects, they're selling their gold in the ground for about $10 an ounce, when it costs just the fine gold anywhere from $30 to $50 an ounce. So it's unbelievable what companies are being valued at today.
And we'll get to merger and acquisition soon in this podcast, but you're right. Right now, the grades are king in this current environment, because the higher the grade, the lower you can keep your cash costs. But there's exception to that, because there are mining companies out there with high grade, but yet have to shut down their mine because bad management or some other factors that
financing.
Financing, management, and other factors that investors don't consider. Especially this one silver Canadian company. I won't mention the name, but you probably know who it is. But they probably have one of the highest grades out there, and yet they had to put their mine into care and maintenance.
Right.
So,
yes.
I mean, grade's important, but there's other factors that come into play when you invest into a company.
Right now, it really doesn't matter. Today, I mean, this exact moment, it really doesn't matter how economic your project is. You can't get financing. It's unbelievable. There are companies out there right now that have IRRs, returns. Anything that has an IRR above 30%, especially post-tax, 30% is a solid project. And even these companies can't raise money to build their mines, and that's another reason why investors are running. They're like, this is a completely dead industry. These companies cannot build their mines, even if they're economic. And so why should I invest in them? And it's a good point. But the corollary there is, if gold prices go up, and I think they will, and I'll make some arguments for why they'll go up. If gold prices goes up, at a certain point, these projects will get built, because the profitability is going to be so significant. The cash flow is going to be so significant. They have to build them. So the gold in the ground, all these companies have to do is survive. I respect, like, one company, Sunward Resources, has a large project in Colombia, and they basically put it on hold more than a year ago. And their stock just got crunched. But they said, no, we'll take the hit. We'll let the stock go down, but we're not going to do anything until the price of gold goes up. They're just waiting. And I actually talked to them, and I go, what's going on? They have a lot of money in the bank. They have a lot of cash. And I said, why don't you start, working on permitting and getting this project, why aren't you doing anything? And he said, no. He said, the board basically recognizes that we can't finance this project, so let's just wait. And so they're going to wait until prices go higher. And I think that's what a lot of these companies should be doing. They have gold in the ground. They should just be patient, wait for the gold to go up. Example, I did an analysis of a company today, Northern Free Gold. They have 4 million ounces, and they're valued, I think they have 3 million ounces of resources, and their valuation is $1 million. And this is a project in Canada. $1 million, fully diluted market cap. They only have 18 million shares outstanding, but they can't get financing to do the feasibility study, and investors have ran from it. It's unbelievable what's happening right now in the mining sector.
Yeah, and I agree. Financing is the biggest struggle in the mining sector right now. Even the royalty and streaming companies are putting a brake on doing deals with mining companies. A couple of weeks ago, we had Sandstorm Gold CEO Nolan Watson, and he said in his conference call that they're going to push the brake a little bit on doing deals and wait for the price of gold and silver to recover until they hit the gas pedal again and start making deals again. Because a lot of the agreements that they have with their current mining companies that they made in the past, a lot of them are struggling. So right now you can't get financing from the bank, and you can't even get financing from the streaming and royalty companies right now.
Yeah, it's brutal at the moment, but I think that's all going to turn. The key number is 1450 gold. And I've been saying this in my newsletter all year long. Until we cross 1450, we're in a downtrend. The downtrend hasn't shifted. A lot of people, when gold has made a couple rallies this year, and we've had a lot of people, and I'm sure you've interviewed some, heard a lot of them on King World News, some other podcasts who said the bottom is in, the bottom is in. I said, and I kept saying maybe, but I'm not saying it's in. Until we cross 1450, you have to beware, and that's what's happened. We jumped over 1300, and then we turned around and went all the way down to 1130. And I know a lot of people who invested, right around 1300, and watched their investment just get hammered. It doesn't take much for these stocks to. We're talking about gold and silver mining, which is the most risky investment you can make practically, and you've seen these stocks just get brutalized really quickly. So it's you have to be real careful. But the other side of the coin, we're really close to bouncing on the bottom. We're right at $1,200 gold. I don't think we can go below 1,100. So the HUI it got close to its low. Low is 145 this year, and it's right now it's at 167. I'm actually a buyer of mining stocks all the way up to the HUI at 250, so I'll be buying shares for the next 6 months, I think. I jumped back in once the HUI went under 250.
Yeah, today is a great time to buy gold and silver stock, and also oil stocks as well, for people that want to get into the energy market. Today, the great time to do that. Also, got to be careful and look at the financial statement, the management, and the business model, and make sure it is realistic as well. Because there's a lot of mining companies out there that really getting close to bankruptcy, and those are the companies that investors should stay away from, especially the exploration companies.
Yeah, I have a book out there. I actually it's actually a textbook on how to invest in junior mining stocks. It's 323 pages long, and I've updated it every year. So actually the 5th edition came out last year, and it actually teaches you how to invest in these junior miners. And one of the things that I talk about there, as I said, is the most risky thing when you invest in these mining companies. The most risky thing is investing in a company that does not have the goods. And what I say about the goods is they don't have what I call a flagship property. So if they don't have 2 million ounces of gold in the ground, or if they don't have 40 million ounces of silver in the ground, then your risk level increases dramatically. So if you invest in a company that doesn't, and a lot of that are your exploration companies, and what I call project generators. So a lot of people say, well, the exploration companies or the project generators have low risk because they can always go back and raise money, or they control their money. But if you're a project generator and you don't have cash flow, it's really hard to generate that cash flow because it takes a long time to build mines. Or if you're an exploration company, if you're a small exploration company, it's really difficult to become a producer or to expand your staff to have the qualified people to do that. So I'm very adverse on exploration companies or project generators. There's a few project generators that I like, but very few. I only have one project generator out of 120 companies I call top picks, because they don't have that explosive upside potential. But your exploration companies, they don't have those flagship properties, and so you're taking on huge risk. And right now especially, there are a lot of companies out there that have these really high-quality properties that are super, super cheap. So why invest in exploration stocks?
I agree with you there. So let's talk about mergers and acquisition now. You just mentioned earlier that Core Mining just bought out Paramount Gold and Silver for $146 million, which I think was a pretty good deal.
Sure.
Yeah. In today's environment, that's a pretty good deal. So, if $146 million for Paramount Gold and Silver, and like you said, you have two mines that are in an advanced stage, are close to production. So, when the price of gold and silver goes up, they'll be able to put it in production, and now they'll have two more mines that will be generating revenue for them. So let's talk about the merger and acquisition. I was surprised that there hasn't been that much activity in the past few years with the merger and acquisition. Are you surprised or not?
Oh yeah, I'm very surprised. I don't know why people from outside the industry don't start buying up these companies. First of all, I want to clarify. You said this was a good deal, but I don't think the listeners understood what you meant, because it was a terrible deal for Paramount investors. They sold.
Oh yeah, I meant good deal for.
Yeah, yes, I know that's what you meant, but I think some listeners might not have picked up on that. They sold it for a 20% premium, a 20% premium off of the bottom. Paramount is basically bouncing on the bottom like everybody else. I would say at least 80% of Paramount's shareholders have bought over that 90% threshold, because it's been well above that. So their investors didn't make any money on this. They're can only make money if they hold the stock and Coor does well. So it was, a 20% premium is absolutely terrible. So they sold the gold in the ground for $16. The sleeper mine has, I think, 5 million ounces. A 5 million ounce project, if we look back when gold prices were high, if you go back to, say, 2007, Rubicon was selling for $2 billion, and they only had found, I think, 2 million ounces, but they were projecting to find 5 million. They hadn't even found it yet, and they were valued at $2 billion. They subsequently have come down quite a bit. But that's how much gold in the ground was worth back in, like, 2007. Now today you have 9 million ounces of gold in the ground, and you're worth 147 million, and that's what they sold for. So if you're a shareholder in Paramount, you're not happy. But I only had Paramount rated as a 2 rating. I rate companies from 1 to 5, and I only had them at a 2 rating, and I was right. The upside potential of that company, a 2 rating means that they had upside potential of 300%. Turns out they had a 20% upside. But I didn't have that company rated high exactly for this reason. I thought they would sell out. Go ahead.
I mean, I believe the lack of acquisition and mergers is a reflection on how the management team in that sector they think. I think a lot of them are short-minded in terms of trying to expand the company and grow. I think a little bit long-term, then I think there would be a lot of merger and acquisition in that.
Oh, absolutely. If people realized what was happening in the world today, they would know that gold's going to $2,500. This isn't supposition. This isn't possibility. This is going to happen. Gold's going to $2,500 minimum, and I'm sure there's a lot of people listening to me saying, Don, you're being way too conservative. It's going much higher than $2,500. On a conservative number, though, you're looking at $2,500. So yes, I'm very surprised the mergers and acquisitions. I mean, these stocks are very cheap. Somebody should be buying all these companies up, and I don't know why they're not. They're all basically on sale here for pennies on the dollar. You can buy Northern Free Gold right now. They have 3 million ounces. They're trading at $1 million. You can buy them for 30 cents an ounce in the ground. I mean, that's just insane. I mean, but let's look at the future. Let's look at a little bit about what's going on today. I mean, if we look at what's happening in Japan, and Japan isn't that much different from what's happening in the U.S. They're just a little bit ahead of us. Their QE right now is $700 billion a year. That is on a $5 trillion economy. If you correlate that to the United States, that would be the same thing if our QE was $2.4 trillion. That's, we couldn't do that. You would be printing, at a pace that was completely unsustainable. So that's what Japan's on right now. They're on a path that's unsustainable, and it's been on a path for since 1990. So we're looking at 25 years of trying this debt expansion, and the clock is ticking. So if you look at Japan, like I said, it correlates to kind of the rest of the world. Their debt situation is worse than ours, but not a lot. It's worse than Europe, but not a lot. And so all of these banks are kind of interconnected, and the banks are literally a house of cards. It's like, how long is it going to last? Now, if you know, people look at the stock market going up 400 points today, and they think, oh, everything's rosy. But if you look at, auto sales in the U.S., I mean, they're not exploding right now. I mean, they're basically, they're not doing awful, but they're not doing great. If you look at housing sales, new housing sales, I would say it's doing poorly, and I don't see it taking off. So, and then the key here is income. Right now, you look at the energy sector. So the energy sector is basically weak right now. So people are losing their jobs. Those are high-paying jobs. That's going to hurt the income numbers. I would submit that we're probably going to have a GDP for Q1, Q2 of 2015 below 2%. I wouldn't be surprised because of the negative outcome of these low energy prices on the U.S. economy, on all the jobs.
And you made a good point about Japan. I believe Japan will be the first to collapse in this currency war, mainly because of just what you said of the gigantic QE program that they rolled out over a year ago, and then also combined now with a tax hike. And so I think the yen, it depreciated against the dollar for the most part of this year,
right,
and it will continue to do so. And then also, if you look at the U.S., a lot of the Federal Reserve officials are talking about doing rate hikes in 2015, but I believe that's not going to happen.
That's the reason why the Dow went up 400 points today.
Yeah.
It basically rebounded from 17,100 all the way to 17,800, just because Yellen said she wasn't going to raise the rates until a minimum of May, I think. So it was just that's how much people are relying on the central banks, the Fed, to basically orchestrate the economy. So our interest rates are artificial. Our quantitative stimulus is artificial. Nothing is basic. We're not generating wealth in this country anymore. What we're doing is we're generating, printing money is what we're doing to keep our heads above water. It's a dangerous game. The economy is a dangerous game, and then on top of it, let's look what's happening in the Middle East. Gold is down at 1,200 when ISIS is not contained. I mean, gold should be higher just on that alone, on what's happening in ISIS. And then Russia. If you look at what's happening, Russia used to be, maybe 2 years ago, an ally of the United States. No longer. They're no longer an ally of the United States. They're angry at us. Putin had a 3.5-hour interview yesterday, where he is basically a State of the Union. The way that they do their State of the Union over there is they basically do it in front of international reporters and let them ask questions to him, which is amazing. Can you imagine that in the United States, where Barack Obama had to sit down in front of an international reporters and do a Q&A? But he basically came out and said, look, we're in an economic war right now with the United States and the West. So that's a very dangerous game, and all the economies are basically connected. I don't see anything on the horizon and then if you look at technologies that are going to basically grow the economy, something that's going to make the economy globally start growing, and the West start growing and Japan start growing. The one thing we have going for us is basically our IT technology, our phones and our iPads, but everybody is starting to own those. Now it's basically a turnover effect. I don't know how much growth that can create. The green energy economy hasn't taken off. Really, the only engine in the United States has been shale oil, which has generated millions of jobs. It's done fabulously well for the economies, of Texas and Dakota and California to a certain extent. But what's on the horizon? I mean, maybe robotics, but I think gold is looking more and more very attractive, and nobody seems to want to own it.
And I think the shale industry in this country is in trouble now, because now it's oil prices going down, a lot of them cannot even make a profit unless oil is above $70. So I think the jobs in that industry are going to start shrinking, and it's going to hurt the economy in a very big way.
Yep.
So let's get your outlook for 2015 for the gold and silver market. A lot of people think 2015 will be the turning point. I know Martin Armstrong thinks 2015 will be the year for gold. I don't know if he's still holding on to that prediction or he changed it recently, but we'll see. So I want to get your thoughts on 2015 and where you think gold and silver is heading.
I think it's heading, well, I think 2015 is basically the beginning of the rise, to $2,500 gold. I think it starts. I think we will see 1450 in 2015, and if we see 1450, then it's kind of off to the races. And that's when everything changes. The sentiment in gold changes, sentiment in the miners change. So you can look at, right now what's happening in December, these low gold prices, you can equate it back to 2007, 2008, when these stocks were unbelievably cheap, and you could buy them cheap, and then everything turned. And in 2010 and 11, you had these incredible returns. I think that's what's going to happen in 2015, 16, 17. And I think the reason why is because I think that if you look, let's go back to the 7-year cycle. So if we look at 2001, you had 9/11, which created a major recession, and then 7 years after that, you had the next major recession, 2008, and now we have 2015. 7 years later, I think we're going to have another recession in the U.S. I think that all of these big events that have been these 2014 were just omens. What happened? I mean, Japan had this massive QE that everybody thought, was crazy. Now you had the ruble go down almost 40%. The ruble's having problems, and I think you're going to see those. I think those are omens heading into 2015. I don't think 2015 is going to be pretty for the economy, for housing, for autos, and for jobs. I think it's going to be kind of ugly. And I actually think when the worm turns, I think this one, and a lot of people have said this, I think this one's going to be worse than 2008. I think that, I hate to say this and scare people, but I think that our way of life is threatened. And I think it's threatened because we've tried to manipulate the economy through debt, and I don't think you can do that. I think we've tried to print our way to prosperity, and I think it was a very dangerous move. We've increased our debt from $1 trillion to $18 trillion since 1980, so that's 35 years. And I think we've done it in it's been a very dangerous way because we haven't been creating wealth. We went to this economic system, what I call globalism, which was very dangerous. Globalism was based all ships rise. That if we let other countries rise, it'll help our economy. But I don't think it has. I think what it's done is it's hurt the middle class. It's hurt the industrial might of America. We're down to 10% in manufacturing jobs. I think it's hurt the lower class as well. And so I think 2015 is going to be basically, I hate to say this, possibly the year of the end for the American miracle, the American dream, American, basically, the dynasty.
That's an interesting prediction. Basically, predicting a doom scenario in this country or in globally as well, which I hope doesn't happen.
The beginning,
yes.
It won't happen all at once.
I hope it doesn't happen, but with the leadership we have in Washington, it doesn't look too good.
No, that's the reason why. If you look at our economic policies and you put them in tandem with our politicians and the policies coming out of Washington, see what's happened in Washington is everything is completely stuck, if you will. We can no longer solve big problems. We can only solve problems on the periphery. But our problems have gotten so large that you can't solve them on the periphery anymore. And since we can't solve anything major, we're stuck. We're completely stuck. So what's going to happen is everything has to basically break down, and we're going to have to localize. Everything's going to have to, first it's going to go back to the state level. And I actually just wrote a book about this. It's actually available on Amazon. It just came out, and it's about a county breaking away from California and forming its own country. It forms a country called Isabella, and it goes alone. And I basically create a new constitution. I show how we're basically going to go back and localize to solve our problems. Since we can't solve them on a national level, we're going to have to solve them on a state or local level. It's the only way. And that's what I say by this coming crash. We're going to crash on a national level because we can't solve our problems, and then we're going to have to revert to going local.
Is that where you live currently, in that county?
Yes, that's where I currently live, yes.
Okay. Yeah, I saw that book on your website. It's actually called, if people want to check it out, The Path to Secession and a New Constitution, Kern County.
Thank you.
So if people want to check that out, you can go to his website, dondurrett.com. So, Don, wrapping things up, if people want to find out more about your work, they can go to dondurrett.com. If they want to find your book, they can go to your website and to Amazon as well, correct?
Correct. And I actually have two websites because I write in 3 different genres. So I write, if you go to dondurrett.com, you're going to see my metaphysical books. And then there's also a menu for my additional books. So I write about metaphysics, and then I write about cultural, which is this political book. And then I also write about gold and silver. So my gold and silver website is goldsilverdata.com. And that database of that website is probably the best website for junior mining companies. My database is very large. There's 525 companies there. So you get a lot of data. Just go there and read the testimonials. My members really enjoy the data that's provided there. And you'll enjoy the website.
And before we let you go, I forgot to ask you, if you don't mind, for 2015, what is 1 or 2 stocks that you think people should pay attention to?
Oh, that's right. I didn't get a chance to talk about any stocks. Let me name a few so people can go and check them out. First ones that you look at is GDXJ and SIL. GDXJ is basically your mid-tier producers. It's not going to go bankrupt, and it's just basically bouncing on the bottom right now. It's kind of a slam dunk 3-bagger, if you ask me. Just buy it and just ignore it for 3 years and go back, and you're going to make a lot. GDX is for the gold miners, and SIL is basically all of your silver miners. That's basically the low-risk way. That's what I tell people to invest from low risk. A couple producers I like is Silver Standard and Argonaut Gold, those two. Some companies that are a couple developers that I'll mention that I really like is Delradian, has a high-grade project in Ireland, Brazil Resources down in Brazil, and Red Eagle Mining in Colombia. Those are the 3 developers, so I'll leave you with those.
Okay, great. Well, Don, thank you for your time, and have a happy holidays, and hopefully you can come back on again soon.
Thank you, Mo. Yeah, next time we'll do it when the prices are higher, so people will be more excited about mining stocks.
And people will be in a happier mood, too.
Definitely.
Yeah, definitely.
All right.
All right, thank you, Don.
Thanks, Mo.